Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This show is brought to you by my company, Bull Realty. If you like to sell properties in the Southeast U.S. or Atlanta, reach out to me directly. My email is michael@bullrealty.com. Well, today we're going to have an interesting show. We have a public company based in Israel that invests in U.S. and they use investors from Israel and from the U.S. They're involved in multiple property types. So I'm curious what companies like this think about the market here in the U.S. today, about financing and kind of what they're seeing in the world of commercial real estate in the U.S. today. Please welcome my guest, Itay Goren. He's founder and CEO of Buligo Capital. Thanks for joining us. Thanks for being here today.
Thank you, Michael. Nice to be here, and thank you for having me.
Well, thank you. And first of all, being based in Israel, what's going,
It's hard even to decide on the question.
Yeah.
Very hard times for Israel and for everyone in Israel. And maybe first and foremost, I want to say that our hearts and thoughts are with the hostages and their families and the soldiers and everybody in Israel that is suffering due to this tragedy.
Yeah. Well, let's get into the commercial real estate world. And you guys are raising money from investors. You're looking for properties here in the U.S. I know you do multifamily, you do industrial, you do senior housing, and you do grocery anchored retail. So what are you seeing today as far as a public company raising money today from high net worth individuals, from institutional investors, family offices? What's it like today compared to maybe last year and the year before? What are you seeing there?
Yeah, very different than 2 years ago, right?
Mm-hmm.
Yeah, I mean, we used to have over demand by investors to everything we did in 2021 and 22, and today obviously appetite is lower. The Fed increased higher interest rate is bad for real estate, so values drop. Investors have more available investments to invest in, alternatives to real estate, and they pick and choose what they want to do. And in general, the appetite is not very strong for investments in general, in Israel in particular. Before the war, we had judicial reform. So that was a big issue in Israel, and now the war in Israel. So investors are much less hungry, to say the least. With that said, I mean, we've been successful over the last year to raise money, to deploy capital, to take advantage of opportunities. We are seeing opportunities because of increased interest rate in all the sectors that we're in, and we're transacting. So every deal that we wanted to close on, we raised the money and we closed it. We transacted close to $400 million last year, and we have appetite for more this year.
That's great. What have you seen as far as trends on finding properties and dealing with your investors since the Fed announced recently that they weren't not going to raise rates again, and they might actually lower them? You've seen anything change?
Well, you see the Treasuries definitely changed. They lowered substantially in the last month and a half since this announcement. So I see more lenders, ease up and they're more welcoming deals and seeing opportunities, and so are investors. So we definitely think this year will be much more active than last year. Last year, the markets were very volatile. Interest rates increased and were expected to continue to increase. So people didn't sell if they didn't have to sell. And the activity in the market fell. People say around 70%. You should tell us, what did you see? And we felt the same. So we transacted less than previous years. This year, I think we will see much more activity as people are eager to invest, eager to buy and to sell. And I think the markets and the liquidity in the debt market is going to improve. We're seeing it improving, but it's too short of a period now since this announcement.
Yeah. What are your expectations of property performance moving forward into 2024 and beyond?
Good question. On one side, there are deliveries from properties that have been constructed or starts of construction during 21 and 22. These properties are being completed and coming into the market this year and next year. On the other hand, since the Fed started increasing rates, starts of new construction projects really dropped like a rock. So beyond 2025, we don't see more deliveries of new product at the sectors we work in. So I think we'll see some softness in certain sectors, in certain areas where there were a lot of construction, and they're seeing a lot of deliveries of new product this year. But overall, we're very bullish on the market. We expect rents to continue to rise and values to rise accordingly, because construction costs are high and it's hard to construct. Liquidity or debt market for new construction is very low, so it's hard to construct. But there is shortage. So fundamentally, in the sectors we're in, which are multifamily, grocery anchored shopping centers, senior housing, and industrial, we don't see oversupply. So when these deliveries taper off, we will see shortage and pressure on rents to go up. And obviously, if interest rate reduces, like everybody expect, we will also see values bounce back.
Yeah. Are you seeing yet, like you mentioned, it's pretty short in the game here since the Fed's announcement. Are you seeing any more available properties than you did last year yet?
Yes, we see January is started strong. So we see more product, more offers from brokers, and we talk with players in the market, buyers, sellers, and we see more activity. It's not enough time to see how this year will take off, but I think it's going to be, as I said, more active than last year.
Yeah, one of the sectors you're in is senior housing, and of course, senior housing took a hit performance-wise during COVID. What are you guys seeing now on your senior housing properties?
It took a tremendous hit. Okay, we are developing senior housing, assisted living, memory care, and independent living in Metro Atlanta. We're building now our 12th facility under the Manor Lake Buligo brand. And we are booming in terms of occupancy, lease up, rent increases. So we're doing very well, but it's following a very challenging long period, because remember, we had COVID and the counties closed our gates pretty much. We couldn't admit new people. Subsequently, we had a big crisis with service industry people. So it was 4 years of really hard times for senior homes, and many people, many players, developers pulled out of the market. So there wasn't like unlike other sectors where they kept building during COVID and post-COVID, in senior housing, we didn't have new supply coming up. So we are doing very well with our portfolio. We're seeing, as I said, high occupancy and high rent increases. And I think it's an opportunity for the next 3 to 5 years. And remember, on the senior home side, you have the silver tsunami, right? Our parents are getting to the age, and they are the largest sector in demographic. So we expect a lot of demand and short in supply. But we see that also in multifamily and in other sectors. As I said, fundamentally, supply and demand, those sectors are in a very good place. Yeah. They are suffering because the current interest rate environment, but supply demand is good, and we're bullish about the future.
Yeah, that's good to hear. And when you mentioned multifamily, of course, multifamily had a great run up in rent increases annually, just kind of crazy numbers, like 10%,
15, 20. Yes.
What are you seeing today? Are rents kind of leveling out? What are you seeing on your portfolio?
We see rents leveling out. We don't see them dropping. We see they're leveling out or slight increase. There are certain areas in the southeast where we are developing and own a multifamily project that there is a lot of supply coming up. So you see a little bit softness in the occupancy. You know, if we were used to 97, 98% occupancy in the last 2 years, maybe now it's 94, 95, or 93. So it depends on the area. We have markets where there are higher barriers to entry, and we're still at 97, 98%. And in other markets where we see many deliveries of new product, we're down to 93, 94%. But overall, the rent trajectory is high, and NOI is expected to continue to grow. Again, for limited new supply and limited new supply of residential unit in general, because people are not buying houses today, right? Because mortgage is so high, and it's I think I read somewhere that it's over $1,000 cheaper per month to rent versus own a residential unit today. So that makes a lot of sense for us to continue and buy and grow in the multifamily space.
Yeah. And you guys do development, and you also acquire properties. And I know you're in core plus, you're an opportunistic and value add. What's the demand from equity today? You're seeing more in either one of those classes?
Well, you know, investors, they want high risk, low return, right?
No.
Yes. And it's hard to find. So we are trying to deliver, you know, best or very good, strong risk-adjusted return. So yes, we do opportunistic deals, which a multifamily development or a senior home development, it's opportunistic because you create something that wasn't there. You have risks associated. And you need to build it, to list it up, and but it's a great opportunity when you know what you're doing. Versus, you know, other people want cash flow. So we are very protective on the downside. We want to make sure we don't lose money. We like high returns. We like taking calculated risks in order to achieve those returns. And, you know, we are not dependent on any one investors. We have hundreds of investors with different appetite profiles. So some investors are looking for more income producing, day one cash flow, you know, moderate risk projects. So it can be a grocery anchored shopping center with some upside built into the program, or some are, you know, they don't need the day to day. They want to take more risk and get higher returns, so they get into developments with us. So again, we're doing all of the above, and we have investors with different appetites to do those.
Are you finding lenders, some lenders open to discussing development, construction financing today? Or
it's hard. People that it's very hard and challenging for inexperienced developers. We've developed over 40 communities, multifamily and senior homes, much more than $1 billion in cost basis in the last 5 years, let's say. So we are experienced. We have relationships with lenders, and even today we're successful in obtaining debt for a construction project. But it's nothing like it used to be two or 3 years ago in terms of the number of banks or lenders that would do the project.
Yeah. Well, it's good to hear there's some providing financing for construction, because these are probably, when I speak to lenders, I think, you know what, keep doing loans, keep looking at loans, because these might be some of the safest loans you've ever done.
Sure. You know, values are low. Loan to value is low.
Yeah.
It's safe. Yeah. It's heaven for lenders, but you know, lenders, they're very institutional and in their mind, and many are, you know, licking their wounds right now on, you know, with office complexes or highly leveraged multifamily and things like that.
Yeah.
Do you see distress in the market? Do you expect distress in the market?
Yeah, we're seeing it. We just accepted 2 assignments to sell foreclosed properties. We sold another foreclosed property a couple months ago, and yeah, we expect to see more office mainly.
Yeah, of course.
Although we just accepted assignment for an industrial deal, and I think most of the foreclosed properties, I think, are where borrowers were not cooperative or the borrowers weren't protecting or taking care of the asset, right? I think most lenders would prefer to work out loans with borrowers today if they're being cooperative and protecting
we see
the
that.
asset.
And I think that's one of the advantages, not to be very modest, of investing with us, because we are a public company. We have a strong balance sheet. We can deal with our problems. We can negotiate and deal with lenders. We will never let a property, go to foreclosure.
Right.
If we believe in the property.
Right. You said you also own industrial properties. Any trends you're seeing there? I know there's been a great run up in demand there. Are you seeing any more demand in any certain size or type of industrial property? Any trend there?
Yes, we see more demand in the smaller, more last mile warehouse distribution centers. The big boxes have been in demand, but they've also been in construction. And there are many deliveries of big boxes, warehouses outside central areas. But I think it's more interesting to buy the smaller infill locations, multi-tenant facilities where the tenant have been there for a long time and maybe paying below rents today, which we're seeing across the board. And definitely industrial is a great space to be in because vacancy is very low. We see many manufacturers building, manufacturing floors. They need warehouses for inventory, for everything, and there is just so much pressure, and rents are continuing to grow substantially.
Tell me, what are you seeing trend-wise in your retail properties for tenant demand, tenant performance? What do you see there?
So retail, many people shy from retail because of e-commerce, right? And shopping centers and the malls and everything that's going on. We haven't been shy of retail, but we played in the grocery anchored shopping center niche. So infill location, open grocery anchored shopping centers. And those have demonstrated resilience during the Great Recession in 2008 and during COVID. And we've done very, very well with those. We see rent grow more where the population, where you have higher population growth. So for instance, in the Southeast, you see higher rent growth than in the Northeast or other areas across the nation. So that's where we focus. We focus on finding the centers that, they need some TLC, tender love and care. Maybe there is some vacancy, but it's a very good center, very good infill location, serving the residents around it with a good grocer. If you have those fundamentals, we know how to improve the center, how to get it to very high occupancy and get it to cash flow favorably. Our portfolio is over 96% leased.
Nice.
So we're doing very well in that space.
Nice. In your new developments and, of course, in any ownership of commercial real estate, you have construction cost and things. What are you seeing trend-wise for your construction costs?
Well, it leveled a little bit. We saw tremendous increase in construction cost in the last 3 years, I would say. I mean, during COVID and then subsequently with supply chain issue, with labor issue, with everything just went up like crazy. We don't expect it to go down to where it was, 3, 4, 5 years ago, but we do expect it to moderate. We don't expect it to continue to go up. And hopefully when GCs, have less work, when they finish their current assignments, we will see a little bit of easement there and maybe a decrease of 2 to 5% in construction costs.
What are your goals for 2024? What are you going to try to do in 2024? Is there a certain sector you're more interested in, or?
I'm like a father of four children. We have four sectors. I really love all sectors we operate in, and I think we'll see opportunities in all of them. My goal is to do more, to invest more money, to take advantage of the opportunity, because I think the next 12 to 24 months will be a great vintage for real estate investments and taking advantage of opportunities. And that's really it.
Yeah. Now, come on, Dad. I know you have a favorite child. Every dad does. They just can't say it, right?
I don't have a favorite child, really.
Well, they're all 4 great children, right?
Yeah, they are. Office is not one of them.
I noticed it wasn't. And I think office is probably one of the best opportunities for distressed acquisitions. But
I tend to agree, but you need to be an expert and really pick and choose.
Absolutely.
I mean, some office opportunities look like an opportunity, but may end up like a bad opportunity, like a tragedy.
Yeah.
So we're not yet in that space.
Yeah.
We have one office deal outside of Philadelphia, great area, and we're struggling.
Yeah. So what would you leave our audience with to think about commercial real estate investment moving forward?
I think it's the best business in the world. I love real estate. I love what we do. I think we see investors in general, high net worth individuals and institutional investors, increasing their allocation from equities and fixed income to alternatives and mostly real estate. So I expect real estate to continue to be an important asset class within an investor asset allocation, and I expect a great ride.
Do you think foreign investors are increasing their allocation for U.S. or decreasing it? What do you see?
Definitely increasing.
Okay.
I mean, every investor, when they decide to invest outside their home market, the U.S. is the first market they'll go to. It's the most transparent, liquid, experienced market that's out there. So if you want to invest in real estate outside your home market, first market to go to is US. People know it, and we see tremendous flow of capital from around the world into the United States.
So you feel like there's a lot of dry powder out there waiting to buy now?
Oh yeah, tremendous amount. I think people were very disciplined last year not to put too much money to work, trying not to catch the falling knife, right? I think we'll see much more of that this year. Yeah. More activity.
Yeah. Well, we'll leave it at that. That's a good statement to end on.
Yeah.
Thanks for joining us. Thanks for being here.
Thank you for inviting me, Michael.
All right.
Great.
And thank you for joining us around the country or around the world. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For commercial brokerage sales and leasing in the Southeast U.S., contact our show host by email at michael@bullrealty.com. By Commercial Agent Success Strategies, 21 incredible one-hour agent training videos. Learn more at commercialagentsuccess.com. And by Lument. For senior housing, healthcare, and multifamily financing, visit lument.com. For more podcasts and videos, subscribe and visit creshow.com.